There are many different ways to invest in the stock market. In fact, there are many successful and safe ways. You can invest in the S&P 500, specific industries, or the total US market, or you can invest in certain types of individual stocks. But in today's video, we're going to take a look at how investing $100,000 in SCHD can be life-changing over time. If you don't know by now, by watching our previous videos, us wealth masters here at Master Wealth like the idea of investing in dividend stocks. The idea of building passive income and utilizing the power of compounding is very appealing. This doesn't mean I don't invest or don't like investing in growth stocks. In fact, I do have a number of growth stocks, but my favorite type is dividend stocks. And if you're looking for a more hands-off approach to investing, you can invest in ETFs, otherwise known as exchange-traded funds. You can think of these as a basket of stocks. There are thousands of ETFs to choose from, some that are focused on the S&P 500, the total market, or specific industries like we're talking about. In fact, there are ETFs that are based on specific types of stocks, which is exactly what the Schwab US Dividend ETF, SCHD, is. And we're going to take a closer look at SCHD and see how investing over time up to $100,000 can create life-changing wealth. But before we begin, do me a huge favor and click that like button down below. Subscribe to the channel as we continue to grow our community of like-minded investors. And with that being said, let's get started. Hey everyone, welcome back to Master Wealth for another video. As always, neither I nor us here at Master Wealth are not financial advisors, so please do not take this as financial advice, and please perform your own due diligence. As you may have seen in other SCHD social media posts or other videos we have done, SCHD by far is my favorite dividend-focused ETF. It's very well-rounded, it's diversified across a number of different industries. It's a low-cost ETF, which means I'm not going to be paying huge amounts of expense fees. It has a great dividend yield, a strong dividend growth rate, and it also has a great performance compared to the S&P 500. Speaking of performance, and more importantly, the S&P 500, which is one of the best and safest ways to invest long-term. In fact, the S&P 500, for those of you that do not know, is made up of 500 of the best US stocks. SCHD, on the other hand, invests in many of these S&P 500 companies, but they do not have 500 positions. Instead, they have around 100 positions in the fund. However, the ETF has been able to go toe-to-toe with the S&P 500 over the past 5 years, excluding Q4 of 2023. And with that, allows for great opportunities when it comes to the power of compounding dividends. If you recall, the power of compounding dividends is when you get paid a dividend from owning a specific stock or an ETF, and you take that dividend payment and reinvest it into the security, which adds even more shares to your share profile. So now, if this specific ETF or dividend stock increases their dividend, not only are you getting a higher dividend rate, but you already have higher shares now. So you can see how that power of compounding builds a dividend snowball in your favor. This is a process that you do year in and year out. And in year 1, year 2, year 3, the dividend income will be very small. But if you stick with it and you're a patient investor, that snowball will get moving faster and faster, and you will see that dividend income skyrocket. When I am asked the question, is dividend investing for retirement? My answer is always the same. If you want to utilize the power of compounding, if you're looking to build a plan for retirement, to get to retirement, to early retirement, that's why I'm investing in dividend stocks right now and utilizing the power of compounding. Again, the power of compounding is giving me more shares without adding additional money to my investment account. This acts as my money, assisting me to acquire more assets, which will help me to get to that number, the number that I need to be financially independent faster. But we all have to start somewhere, whether that's investing just $100, $1,000, or even $10,000. It is a process that you need to stick with long term, and you will reap the rewards, or more specifically, the dividends. Right now, if you bought $10,000 worth of SCHD today, the ETF currently yields a dividend of 3.43%, which would equate to year one's dividend income of $343. SCHD trades at a per-share price of $77.43, which means you could buy an additional 4.4 shares to add to your share count after taking in the year one dividend income. SCHD also has a 5-year dividend growth rate of 15.56% per year to go along with their 3.43% dividend yield. Let's take a closer look at the makeup of SCHD. As I mentioned, SCHD is a well-rounded ETF with exposure to numerous industries. The top 5 industries, along with their exposure for the ETF, include industrial, which accounts for 17.55% exposure, healthcare, 18.06%, consumer defensive, 14.22%, financials, 14.02%, and technology, rounding up the top 5 at 12.56%. These top 5 sectors account for 74.4% of SCHD. Next, let's take a look at the top 10 positions, which include PepsiCo, which accounts for 4.59% exposure, Broadcom, 4.45%, Merck & Company, 4.37%, Coca-Cola Company, 4.34%, The Home Depot, 4.2%, Cisco Systems, 4.07%, Texas Instruments, 4%, along with the Verizon Communications at 4%, ABV at 3.98%, and Chevron rounding out the top 10 at 3.92%. These top 10 holdings account for nearly 42% of SCHD, and in totality, SCHD has a total of 1,104 positions. Next, let's take a look at the compounding power of compounding and look at an example on how you can get that dividend snowball moving in your favor. In this example, we're assuming a 12% return, which is less than their 5-year and 10-year average rates. So, trying to be a little bit more conservative when looking at this example. If we assume the same dividend growth rate, SCHD would go from paying a year one dividend of $2.64 per share in annual dividends to paying $3.05 per share the following year. In this example, we will reinvest our dividends but add no additional money to the pot. So, in year one, as we saw, we will have about 142 shares, which pay us that $343. That will add an additional 4 new shares, and we will now be earning $448 in dividend income in year 2, between both having more shares and that 15% dividend increase again. Again, these are hypotheticals, but we're going off historical averages and even being a little bit more conservative in terms of returns. If we continue doing this for the next 7 years, you can see how the dividend income will go from $374 in year 1 originally to roughly $2,000 in annual dividend income by year 10. And this is all because you invested $10,000, which may take some time to get to $10,000, but I know that there'll be people that'll be investing much more than that. And there'll be people that will be investing much less than that. So I just picked this $10,000 rate and I'm showing you an example on how you can get that snowball moving in your favor. But in this example, it's just investing the original $10,000, adding no more money from your bank account into that $10,000 pot, and just reinvesting your dividends each and every year. So, going from year 1 to year 10, we could reach nearly $2,000 in annual dividend income. That is some good money, but that is not life-changing money. So let's take a look at another example, which puts the power of compounding into overdrive. In this example, we will start with our original $10,000 investment. We're going to reinvest our dividends the same way we just did in the first example. But the change now that we're going to make is we're going to add an additional $5,000 investment each and every year into SCHD. So, on top of reinvesting our dividends each and every year and adding an additional $5,000 per year, which accounts for roughly $415 per month. If you want to break it down to monthly, that's nearly half of what the average auto loan payment is in the US today. So, let's take a look at how this example turns out. So, in year 1, we would have that same $343 in annual dividend income. But in year 2, we will reinvest the 5 additional shares that we bought with that $343 in year 1. But now, we're also adding the $5,000 of fresh money into our investing pot, which will add even more shares, bringing up our total share count from 142 in the previous example to about 218 in this example, which equates to annual year 2 dividend income of $664. $220 more than the first example. So now, moving down to year 3, we will surpass the $1,000 in annual dividend income. And by year 5, we will surpass what took a decade in the first example, bringing in nearly $2,000 in annual dividend income. Moving on, you will see that by year 12, we will surpass $10,000 in annual dividend income, bringing in $11,055. And if we continue doing this for 19 years, waiting is generally the hardest part. But by year 19, we will have $100,000 of fresh money invested, not counting any reinvested dividends. We will now own nearly 1,400 shares of SCHD when we started with just 142 shares at the beginning. And our annual dividend income will now be nearly $50,000 per year, which is about the average annual salary for an individual in the US. That is some major dough right there, and that can be life-changing. This is just through that period of time. Imagine if that period of time extends and continues to go. This is money that you can definitely live off of, allowing your money to work for you and to compound over time. $100,000 in SCHD, like I said, can be life-changing. And the great part of all of this, SCHD in this example is just going to be one part of your portfolio. You need to diversify your portfolio. So maybe you have some S&P 500 exposure, you'll have this SCHD exposure, and maybe you'll have some individual stocks as well. But you put in the work, and I understand it's a process to get there. You may not have $10,000 to invest in SCHD right now. So like I said, start with 100 and build up over time to get there. But you can see in this example how adding a little money each and every year, each and every month, can start compounding in your favor. Again, these are all hypotheticals and everything isn't gonna play out exactly like this. But I just wanted to show you how that power of compounding and how utilizing that with an ETF, my favorite dividend ETF in fact, SCHD, can create life-changing money. And for those of you that are wondering what my plan is, I look to add to SCHD each and every month, even if that means increasing my average cost basis. Again, I hope you enjoyed the video, and down in the comments section below, let me know what your annual goal of dividend income is. And with that being said, again, if you haven't done so yet, smash that like button down below. Remember, financial freedom starts with an adaptable mindset. See you in the next video. Cheers!